Good afternoon, Robert Lewis, Lend to Texas, in association with Open Mortgage, lendtotexas.com, NMLS license number 180100. Talking USDA and how USDA loans and guidelines look at student loan payments when we're calculating those payments in your debt to income ratio for qualification purposes. Bottom line, the guidelines say this: we must use the greater of 1% of the outstanding loan balance of the verified fixed payments as reflected on the credit report, okay? If a payment has been established, okay? If a payment is in deferment, I'm going to deal with that, or if a payment has been reduced, deal with all things. So if you look at the credit report and we have a fully amortized payment, okay, then I can use that payment, or there's an exception with USDA that if you as an applicant is on a fixed payment plan, an IBR, income-based repayment plan, and is not subject to change under the terms of the agreement, right? And two, the monthly amount due. So if it's not subject to change, so if you have a plan, an income-based repayment plan, long story short, in play, and we get the documentation, then with a USDA loan, I can use that payment to qualify you, or to put in your debt to income ratio to qualify you for your loan amount, how much you can buy, and to figure out what your debt to income ratio is, opposed to FHA. Okay, FHA now says that I'm either going to use 1% of the outstanding balance that's on the credit report if the loan is in deferment, or I'm going to use the fully amortized monthly payment. I can't qualify you any longer with the income-based repayment. Income-based repayment. So, two big differences as far as how student loans are calculated. Bottom line, if you have an IBR, income-based repayment plan, and you're looking USDA, right, rural housing, and don't let the rule fool you. If your lender is not checking to see if the house that you're looking to buy is in an USDA eligible area, you need to get another lender. I have several cities. I'm in Texas, and San Antonio strikes a chord just off the top of my head, but certain parts of the actual city that are still USDA eligible. So why is that important? USDA allows anyone that meets the income requirements to be able to finance 100% of the purchase price, kind of like VA. So you don't have to have been in the military to have a certificate of eligibility. Yeah, if you didn't know, you're dealing with the wrong lender. You guys need to start doing some more homework on these lenders that you're dealing with. So deal with somebody that you know, like, and trust, that you can communicate with, that you resonate with. And I'm not saying that they need to know everything, but they need to have the ganas, the desire to go get the answer for you, and not just pigeonhole you into the one product that they know. So back to USDA, that might be an option for you, especially if you're rural, or in some cities, you just have to check. Every house needs to be checked because it might be eligible and allow you to get into the home at 100% of the purchase price. So kudos to USDA, and that's what it is for now. Once again, the only thing constant in this business is change. So if that changes as far as those guidelines and how they see the reduced student loan payment, I'll get back with you guys. But for now, my time is up. I thank you for yours. As I said earlier, Robert Lewis, Lend to Texas, lendtotexas.com. And yes, we are an equal credit opportunity lender. Peace.